No. This seems like a pretty nice home. All right, today is day 392. What we're doing today is we're adding a newly listed property, right? Because look, what have we been doing? We've been looking at properties every single day, and we've been looking at BRRRR properties in Birmingham. As new listings come onto the market, it's very crucial for you to figure out, hey, what are 4 bedrooms and 5 bedrooms coming onto the market and being listed for? Now, what I do is I usually kind of list it out by zip code. If you remember correctly, I've had this running list for probably 6 months now, and I just continue to add to it every single day, especially for properties that have been coming on for the last 3 months. And today we separate them out into zip codes. So today we're at 35228. This is the 1567 in Delton Place in Birmingham, Alabama, 35228. And just so you guys know, what I'm filtered on is simply 4 bedroom plus houses, and they've been on Redfin for less than 7 days. That's all I look for, because I am staying on top of what the market is doing in this area and just exactly what type of properties and what dollar per square foot are they coming onto the market for. Now, let me see what neighborhood this is. I'm just to zoom out. This looks like it's right in between West Fairfield and Wilkes, between West Fairfield and Wilkes. Okay. And let's see the condition of this home. This home, let's see. Because if I want to see, hey, if I'm renovating a home and turn to a 4 bedroom, what does it need to look like? I mean, these photos look okay. Doesn't look like, looks like the darker wood. Looks, most flooring and the photos look like darker medium brown hardwood. Paint needs to be painted, and that gives me a pretty good idea of how the home looks like. And then if I can just write something about the kitchen is dated but usable, right? Look at this kitchen right here. Kitchen has tile flooring with, it could probably use a better handles and hardware. Kitchen is nicely tiled. Cabinets look like the older brown color and needs hardware replaced on cabinets. So this gives me a pretty good idea in case I ever need to look at a comparable property in 35228 and I'm thinking about converting the property. I have to think to myself, hey, is it worth it, right? Because what is a BRRRR strategy? The BRRRR strategy is buy, rehab, rent, refinance, and repeat. Now, the 70% rule is what I like to call it, is very common in the industry. If you are all in, let's say, 50 grand purchase and a $20,000 rehab, and you're able to get the property to be worth 100 grand, well, you now can go get a debt service coverage ratio loan, a DSCR loan for 70% of the value of the home, and you can take back out originally $70,000 that you used to buy the home. When you go through that, you are now able to have what I'm calling a perfect BRRRR, which means that your total amount invested into the property, you're able to take back out and use it. That same amount of money can be used towards your next purchase. And this allows you to get out of the rat race where you're buying one property and then you're saving up all your money just to kind of buy the next property. That's how you get out of the rat race, because you're able to recycle the capital. Now, these are fixers, right? You got to do a good amount of rehab in order to get them to be worth that much more money. So for this property, let's go ahead and just take a look at this. This property at 1567 Delton. Now, I know this is not going to be a deal because I'm looking at properties and usually they have to be right around, let's say, 100 grand for a 4 bedroom to make it work. Let's see what kind of rents are we seeing in this area. So if I go to affordablehousing.com, I go to the market rent estimator, plug in the address, plug in the bedroom count. I can see that the average rent for a 4 bedroom here for 25 units within a 3.5 mile radius is $13.81. So I use $13.81 right here. For our furnishing, I'm going to assume I'm replacing the toilets with high pressure flush toilets right here, 132. I'm going to repaint the cabinets to make it look nicer. Cabinets, repaint, boom, $3,500. I'm going to repaint the entire home, and the home is $2,376. I'm assuming all the flooring looks okay. I got $500 for landscaping, $1,500 for the roof. So that gives me a total rehab of 16 grand just to do everything. To make it tip top shade and attract the best tenant. I mean, you could argue it's probably rent ready, but I like to make the home a little bit nicer if I can. Now, what are my other numbers? I'm going to get my property taxes right from here, 216 from the Redfin calculator, 216. My insurance is going to be equals 194, and I'll multiply by 1.2 because I expect that this insurance premium is for a primary residence. So I'm adding a 20% premium so that we account for a higher premium, because usually insurance companies view your property as a higher risk. So that's why they add a 20% premium. I'm adding a 20% premium because I'm accounting for a higher premium. I got 10% for my maintenance. I got 10% for my property management, and I got 5% set aside for vacancy. Again, you've been listening to our lives. Maintenance is so important, right? You got to understand that this money doesn't belong to you. This is money that is set aside every single month because you know that roof is going to get replaced. You know that HVAC is going to get replaced. We just got to go to replace some parts at our HVAC unit for like $3,500, just like that. So you don't set aside this money every single month. You're going to be in the place where you realize that you didn't set aside enough reserves. That's a lesson learned for a lot of people. All right. So for down payment, an F19 equals 25%. And I'm going to do asking price multiplied by my down payment, part 20% actually. No assignment because that was yesterday's creative finance deal. 2.5% for closing costs, $16,000 for renovations. My finance amount is going to equal to my B4, my asking price, minus my down payment. So I'll be financing about $199,920 at roughly 7.25%. That's what I'm estimating. And if that is the case, you're going to be negative cash flow, $776 if you buy this property and rent it out for $1,381 minus 777 as a negative 12.8% return. Negative, right? I'm just gonna write $250,000 because that's what it cost me. And your rehab, it was about $16,700. 20% down. Again, your mortgage was 7.25%. Now, watch what happens if I were to say, hey, let me lower my asking price. Right? Watch what happens to his cash on cash return number. Let's say I go to 100 grand. Now it's 1.26. So it's 90 grand. Again, this is assuming everything else stay constant. If I had to buy this property for like $70,000, probably because the property tax is so high, you're gonna buy the property for $60,000 just to get 10.3%. Now, does that mean the 10% is the magical number that every ought to go for? No, but you got to understand why your strategy is what your strategy, what that execution risk looks like to you, right? What is the chances of the contractor showing up on time, doing exactly everything he says, and finishing the project on budget on time? That doesn't happen quite often without any issues. So you got to be very careful with that. All right. At 10.3%, $60,000, $1,381. Now you can cash for $260 a month. That's a 10.3% return, assuming you buy this property for 60 grand. Now, obviously, that's not very realistic, right? It's not realistic because you have to pay so much. Now, I'm gonna do one more scenario. Let's say interest rates continue to go down. Let's say it goes all the way down to 6%. Well, all of a sudden, you saw that this jumped up, right? Just cash and cash return number. So now your willingness to pay might go up to 70 grand or 68. So now you can see if this still rounds up to 10%, what a drop in interest rate by 1.25% does to your asking price. It bumped it up by 8 grand. So that's something that you have to pay attention to, right? Not just on the Federal Reserve raising interest rates, but more importantly, paying attention to what your willingness to pay looks like as interest rates and the environment continue to fluctuate, right? That stuff is really, really important. Some people might say, hey, I am waiting on the sideline until the Federal Reserve cuts the rates more. But you have to understand that the bond market is what really drives interest rates, specifically the 10-year Treasury bond yield. As the 10-year yield goes up and down, right, there's also a spread between the 10-year yield and mortgage interest rates. Now, historically, the spread between the 10-year yield and mortgage rates has been between about 1.5 to 2. But during the pandemic, a couple of years ago, I mean, we saw the spread go as high as 3%. So that spread has already narrowed. So you got a big move there. Then with the job market and the Federal Reserve's projection of interest rate cuts, you also saw that the spread got a little bit more narrow. You also saw that the 10-year yield has continued to drop down a little bit from its highs of 5s. So that's why you got another big move in the interest rates for mortgages because of all those moves in the bond market. So be very careful. Please make sure you guys are staying on top of the market and understand the correlation between the 10-year yield and the mortgage interest rates. All right. So for today, I hope you all have an amazing Saturday. I hope you all spend some quality time with your family and friends today, because that's what life is all about. All right. And we are out. We'll be back here tomorrow again. So today, what we do, we found a property. We added to our comp list. We analyzed the deal because we didn't want to skip the rep. But most importantly, it's very important for you to keep a pulse on your market and see what a dollar per square foot looks like for comparable properties in similar divisions and neighborhoods. All right. I hope you all have an amazing Saturday. I'll see you all back here for